Did you know that in 2024, it is estimated that over 67,000 people in the UK were registered with an individual voluntary arrangement, commonly known as an IVA. So, if you're worried about how an IVA might impact your chances of mortgage approval, then make sure that you stick around. For anyone who doesn't know what an IVA is, it is an agreement between the person and their creditors where it is agreed that the entire debt will be paid back over a period of between 5 and 6 years. It's legally binding and managed by an insolvency practitioner, and once it's been approved, the creditors can't take any further action and the interest is frozen. IVAs are often used as an alternative to bankruptcy, and they are potentially suitable for people who have a regular income and want to protect assets like their home. So yeah, if you do have one, it's not exactly ideal when it comes to getting a mortgage, but it's also not the end of the world either, and there potentially could still be options for you. So now that you know what an IVA is, you're probably thinking, can I get a mortgage with one? And the short answer is yes, you can. Does this mean that every single person who has an IVA will be approved for a mortgage? No, of course not, because there are lots of other factors that the mortgage lender will look at when it comes to the mortgage approval process. But there will be very specific things that the mortgage lender will want to know about the IVA before they agree to lend you the money. So these in no particular order are when the IVA was registered, the circumstances that led to the IVA happening, and how much deposit you need if you're buying with an IVA, or how much equity you have in the home if you're remortgaging. Has the IVA been paid off? Have the last 12 months of payments been made on time? The monthly payment amount and the details of any bad credit that has occurred after the IVA was registered. Like I said, there will be lots of other factors that the mortgage lender will want to know when it comes to approving your mortgage application, but these are some of the key factors they'll want to concentrate on when it comes to the IVA. Okay, so number one, when was the IVA registered? Alongside the amount of deposit that you have, this is probably going to be the biggest point here, and the golden rule is ultimately the longer ago that it was registered, the bigger your chances are going to be of mortgage approval. These exact timeframes alongside whether it has been paid off will go hand in hand with how much deposit that you potentially have, so we'll be breaking that down in the next point. Okay, so the next point we're going to be covering is how much deposit will you need depending on when your IVA was registered and whether and when it was paid off. So you can actually do this with as little as a 5% deposit, but the requirements are very specific. So let me explain in a little bit more detail. Okay, so after it's been registered for at least 6 years and providing all payments have been made on time and it has completely been paid off, then yes, there may be options with a 5% deposit. Or as long as it's been completely paid off for at least 3 years, then there are also potential options with a 5% deposit. Now, if you don't qualify for a 5% deposit, then there are potential options if you have a 15 to a 20% deposit, and I'll again explain this in a little bit more detail. So a 15 to 20% deposit would apply if you've paid this off for at least 1 year. So you might have satisfied the IVA early, but you've satisfied it over 1 year ago and up to 3 years. So between 1 and 3 years of it being satisfied would mean that you could potentially qualify for an option of between a 15 and a 20% deposit. And the final deposit amount we're going to talk about is if you have a 25% deposit, which I appreciate is a really big deposit for a lot of people, but this would be if the IVA is still active or it's been satisfied for under 1 year. So just to recap, if it's been satisfied for under 1 year or the IVA is still active, it's highly likely you're going to need at least a 25% deposit. Okay, so the next point we're going to discuss is circumstances leading to the IVA. Now, there are no hard and fast rules on this, but generally speaking, if there are certain life events that led to something like an IVA happening, then it will be viewed upon more favourably. For example, let's say that you had taken out an IVA on the back of a messy divorce and we could demonstrate this was clearly an isolated incident, that type of thing will definitely be treated much more leniently when it comes to the mortgage approval process. Like I said, no hard and fast rule with this one, but I think use a little bit of common sense with it. And if you can see and demonstrate it was something isolated, it is out of character, that is going to carry weight and really have a positive impact potentially on the application. Okay, so the next point is, has the IVA been paid off? Now, we've already spoken about the implications of paying the IVA can have when it comes to the deposit that you're actually putting down. Obviously, if it's been paid off, that could mean that you're required to put less deposit in. But also one of the other big factors it's going to have will be that the IVA payment, that monthly amount that you're paying every single month, if it's not there, then it's not going to impact your affordability. And by your affordability, I mean how much the bank is prepared to lend to you. So obviously, if you're paying back an IVA every single month and that is still active, the mortgage underwriter, who is the person deciding whether to lend you the money or not, they're going to see that monetary commitment, and that could have a negative impact on the amount that they're prepared to lend to you. Okay, so the next point is, have the last 12 months of IVA payments been made on time? Well, basically, when we talk about this one, the mortgage lenders would expect this to have happened. If you have done this, great. If you haven't made this on time, then they're probably not going to lend to you the mortgage. It's really as simple as that. Okay, so the next point is actually the amount of money that you're paying back for the IVA every single month. We've touched on this point briefly, but the reason they want to know the exact amount that you are paying back every single month, assuming you are still paying the IVA back, is so they can take that into account when deciding how much money they're going to lend to you. Ultimately, if you're paying something back each month, that's a financial commitment that you're paying, and it could negatively impact the mortgage application. The bigger that payment is, the more it's going to potentially impact how much they're prepared to lend to you. And the final point we're going to talk about is the details of any bad credit that have happened since you took out the IVA in the first place. And the reason that the mortgage lenders will want to know this is they really want to understand, since this IVA happened, which is, one of the more severe types of bad credit that we see, they want to understand, has this person ultimately learnt from the mistakes, and is this type of thing likely to happen again? So if you've taken out an IVA and all your debts have been consolidated, and since that point everything's been immaculate and all payments have been made on time, then that's brilliant, because it demonstrates something's happened, that you've put measures in place to fix it, and you're doing exactly that. However, if you've taken out the IVA and then you've taken out more credit after that point and defaulted and missed some of those payments, it's going to have the opposite effect. And that's going to say to the mortgage lender that there's a good chance if they lend this person money, their money's not going to get paid back as well. And that's ultimately why they're going to be concerned about. So really important, if you've taken out an IVA and you're looking to get on the property ladder and have your mortgage approved at some point, absolutely crucial that you keep your payments on track after that point. So there you have it. Having an IVA, it doesn't have to mean the end of your home ownership dreams. And with the right steps taken, and if you're proactive, then the chances of getting on the property ladder and getting a mortgage approved are entirely possible. As always, if you do have any questions, please feel free to put those in the comments below. Alternatively, you can send us an email, and the email is in the description. So, thanks for watching. Please make sure that you hit the subscribe button and turn on the notifications for more tips on bad credit and all things bad credit mortgage related, and we will see you in the next video.